Organization of Petroleum Exporting Countries, or OPEC, has also announced that it will be raising crude output in the month of September. Manisha is here to tell us more now. Following previous months of increase, another increase this time around, Manisha.
Well, yes, the crude oil prices have declined for a third straight day, and this is after the OPEC Plus meeting over the weekend, where they are looking to increase production further on in the month of September as well. Remember, with this, OPEC would have brought in much of its output cuts, the 8 members that is, and that seems to be weighing onto the prices. But not so much, because that Russia sanction threat is still at large in the global markets there. So when you look at the Indian crude imports overall as a picture, prior to Russia's invasion in Ukraine, the number was quite small. 85% of India's imports at that time were from GSS countries, like the Gulf countries, that is. And when you look at the imports from Russia, they were a minute 0.2 to 0.5% at around $5 billion worth. But post-Russia and Ukraine conflict, and because Russian crude oil was available at a much discounted rate, we did see India and China start to buy a lot of it. So from 0.2 to 0.5%, what we did see in the first half of 2025, those imports surged to a huge 35 to 40% of overall Indian imports as well. That is where they begin. Also, when you look at the Kepler data more closely in sense of numbers, then for the month of June, we saw Russian imports of crude into India at 2.1 million barrels per day. By the time it's July, we've seen a decline to 1.8 million barrels per day. But 35% for the first half still stands in sense of imports from Russia there. Now, the markets are looking at those important deadlines where we have US pressuring India to cut its Russian oil imports. US also is pushing for a peace deal between Russia and Ukraine. There's a deadline by the end of this week. If that does not happen, then there is a 100% secondary sanctions that we are looking at for buyers as well, and there could be more action and reaction too. So with this, the markets will focus on Friday. That is when the US president says a deadline there lies in. Now, there are a couple of scenarios to this. If US does go ahead with the restrictions on Russia, the markets tell us, and many of these banks and brokerages also have come out with reports suggesting that this could take the crude oil prices in a 3-digit territory above $100 a barrel, because Russia does produce, it's the second or the third largest producer in the global markets there. And with the kind of production Russia does, OPEC members will not be able to meet that. There's not enough global spare capacity, and you will see that knee-jerk reaction come in for the crude oil prices. A second important thing is that annual bill for Indian markets would also balloon by nearly $9 to $11 billion, because that discounted Russian oil, if that stops to come, and if India has to buy it at the high prices, then we are looking at that bill also going higher. India, remember, is the world's third largest importer and consumer for crude oil, and that will shift a lot of markets and prices in the international markets. So it's going to be very important this week, by the time this week ends, on what really happens with Russia, Ukraine and US, and whether or not we actually see that ceasefire go through. Unless that happens, we would be looking at very strong numbers coming in.
Manisha, thank you for that. And that is the reason why crude prices continue to remain resilient despite this another increase coming in from OPEC and its allies. Now, let us